So I recorded this video earlier, however, I realized once I uploaded it, my mic wasn't plugged in. So now I'm re-recording it. Took two trades today, ended up missing out on my, I guess you could call it missing out, chose not to execute um, on the main move of the day. So we'll get into that right now. Starting off with the main move of the day on both ES and NQ, however, I would have preferred to take the trade on ES. However, I wasn't attentive. But let's get into it. So starting off on the hourly time frame, as we continue to the upside market open, we ended up taking out these highs right here. Once we took out these external highs, if I turn that back off, wow, we're up 2%. I didn't even realize. Once we took out those external highs and internal, I wanted to see a change the state of delivery to the downside. I was looking to execute upon the displacement below this low right here, below this wick. This was the change of state of delivery entry I was looking to take. Any displacement below this low. However, I was looking to actually catch a higher risk reward trade. I wasn't expecting price to displace as much as it did. When looking to take this trade, I really only wanted to see it displace, a couple points below this low in order for us to execute, maybe somewhere around here, and then catch that short all the way down to, whatever internal liquidity we had. But during this time, price action displaced 30 points, and this was almost around a 30-point candle, and kind of scuffed the risk reward. I guess I was too focused on the risk reward aspect. The trade was an amazing trade. This was an A++ Confluence trade. Amazing trade. Textbook for how I execute. However, I just didn't like the market order. I didn't like the fill, I guess. I got a little bit greedy on the RR, and that caused me to miss out on this trade. Once price action made a slight retracement right here, I was debating whether or not I wanted to actually market order. I had the panel out and everything, but I chose to not execute. However, here's the issue. Well, main issue of the day. I was very, very confident on this trade, so my confidence level, was up there. Higher time frame confluence, internal liquidity, micro changes state of delivery to the downside. Amazing trade, right? But what I failed to realize was on ES, I was too caught up on NQ, looking for a better RR on NQ, and note, it was still a good RR trade. 1 to 2, it was still a great trade. However, by staying too focused on NQ, I didn't even acknowledge the displacement on ES. ES provided the trade of the day. Now, I do trade both NQ and ES. I execute on whichever pair gives a better entry. And in this example, ES gave a whole lot of a better entry, did exact same thing, took internal higher time frame SMT, and once we did that, you could see amazing, really a perfect change of state delivery to the downside, and perfect draw, right? 1 of 4R. Missed out on this trade because I wasn't attentive. That's completely fine. It's a little bit different while I'm back testing. Since I recorded the video earlier, I'll re-show you guys. Right here, when I'm back testing, since I do go candle by candle, I'm able to be a lot more attentive and see, hey, which pair, looks better for a trade execution. This is a bad example, but obviously ES looks better. And it really was just a mistake of not being attentive. That's why I missed a short. Nothing wrong with that. In result to me missing that short, once price action continued to really liquidate to the downside, I eventually wanted to see these lows get hit, but once we took them out on ES, that's when I knew, hey, we'd most likely form a higher time frame SMT, which we continued to for a while until, we eventually invalidated it. But now let's get on to the two trades I actually took. Now, these were lower probability trades, and I knew that going into it. This first long, I knew it was low probability. I risked very, very little. I probably risked around $150, maybe 200. And why, you may ask? Well, If I would have shorted, I still would have been looking to see these lows get taken eventually. And with understanding where the higher time frame draw was, I wanted to see a quick reversal back to the upside, maybe taking these internal highs. However, like I said, I knew it was low probability. I approached the trade knowing the risk conditions, and I de-risked, formed an SMT with ES, obviously, and changed the state of delivery to the upside. This wasn't an A plus trade, and we got stopped out. There was nothing wrong with that. De-risk, understood the risk of it, wasn't as confident as this one, because this really was the trade of the day. Now, this short right here, what did we end up doing? Why did we end up shorting? Price action did the exact same thing, because that's really how I execute every single time. Price action formed an SMT, also taking internal, and once we did this, simple, change state of delivery to the downside, and really, the reason why this trade was also a loss was because I was looking to actually see price go lower. I wanted to see at this point, well, the internal we had formed. Now, what do I mean by that? And I'm getting stuck on my words here because we formed new internal right here. So this would count as the external of the range. What did we do? We traded toward the internal, took out internal liquidity. Once we did this, what did we do? Formed an SMT, and that was enough confluence in order for us to continue back to the upside. Got stopped out. That's completely fine. I was just looking to target more, and really I wanted to see these lows get hit, but we didn't end up hitting them until later. Price action did whatever. I was off the chart by then, but you can see we eventually took out these lows. What else? Yeah, those were the two trades on the day. This one, I knew it was still lower probability. However, it was a lot better trade than this one, so I did end up risking around $200, and so total loss around $300. Not a bad trading day at all. Typically people will beat themselves up about missing a trade. However, this is textbook. I have so many trades back tested just like this. Oh my gosh. Where let's just find some ES trades. Not that one. Okay, I really only have like 10 ES trades back tested. But I mean, regardless of the regardless of what I'm trading, all my trades look the same. Nothing really changes with them. So it was just that I lacked attentiveness. Nothing wrong with it. No reason to beat myself up about it. It's textbook. Happens every day. I execute upon the same model every single day. So guess what? We'll just be more attentive. That was my fault. Next time when I'm focusing just a little bit more on the displacement, just need to look to my side and see, hey, how's the displacement on ES? The one thing is, the one time where I do not end up looking at ES or whatever pair is based upon internal. The reason why ES was a great trade to take, and NQ of course, was because they both took internal. For me, that is amazing. Oftentimes I'll find that NQ will take internal and ES fails to, or ES takes internal and NQ fails to. However, what really made this trade A plus was the higher time frame confluence and the fact that they both took internal. I don't know what people would really call this pertaining to the SMT. Some people are like, oh, a stronger SMT if it's like this compared to this. To me, I don't really care. However, pertaining to my entries, I do care. But on the higher time frame, I don't care. SMT is an SMT, but on the lower time frames, I do care. I like to see the SMT like this. I don't know what it's called. Stronger correlation. I'm not sure. Whatever pair is correlating stronger. But since it was on the higher time frame, I didn't care. And we still took out internal and ES and made ES the optimal trade of the day. Just ended up missing that. Like I said, still amazing. I had great confidence going into the day, understood what price action was looking to do, and risked accordingly. that's really it. So, bye. Ooh, Sigma.